All right, everybody. So we've waited about 5 minutes. I think there's a little over 100 people in here. We have the recording, so if people show up late, they can just rewatch this after the fact. So this is really the first introduction to Traderlink, or the Apex dashboard, which is what we're looking at currently. So thank you all for being here. I know people from the Apex Capital side as well as the RG side have kind of seen this grow and become what it is today. It's been a tedious process. It's been a work for, God, 3 years now. So I'm really happy that we're finally at the point where we can kind of share this with you, get some feedback, and really build a tool for retail traders that's going to give us an edge at the end of the day. So first things first is really why even create a platform? Like, what's the point of having access to all of this information? Why do we even need it? So if you've been trading for any length of time, you quickly realize that having access to information is probably the most important thing as a trader that you can have. We all start off just looking at the chart. We all start off going, oh, it's a bull flag, oh, it's a bear flag. But as time goes on, we start to realize that there's a need to see deeper into the market to kind of identify what these market makers are attempting to hide from us and see it all in a way that you as a human can actually understand what's going on. I mean, you look at the time and sales, or you look at the options contracts, there's hundreds of thousands of lines of information being processed by the stock market, every hour. Right. So if you're just trying to look at that in a raw format, there's no way you're going to get any useful information out of it. So knowing that, we set out on this journey to create something that actually has a substantial value to all of us as retail traders, to try and provide that look behind the curtain, and provide you with the information that helps you make more educated decisions in your trading on a day-to-day basis. So there are definitely some things in this platform currently that you would be familiar with, things like time and sales, which are built into a lot of brokers, but not all brokers. The unusual options, which most of us are familiar with, either unusual whales or flow algo, and being able to identify top orders for each ticker throughout the day, whether it be transactions on the market that you're able to see and visualize actually on the ticker volume, or dark poolers, which are large orders that market makers are trying to put through without you necessarily knowing where, when, why. And giving you a pretty layout to actually see all this information. So what we're going to do today, it's not going to be an overly in-depth explanation of all the different exposures, of all the different modules. What we are trying to do today is just give you a platform overview, some basics, so you can get started. Over the next couple of weeks, while we are rolling out this beta test and collecting information from everybody, again, if you are using this platform, any feedback that you have, good, bad, you love it, you hate it, please give that to us so we can take that into consideration to create an even better platform than what we have here. So just from a very basic, how do I even utilize this platform standpoint, after you've logged in, right? So you're at the homepage, you go to the dashboard login, assuming you've already requested access to the beta, you're going to come across a screen that looks similar to this. Your layout is going to be different than mine. So first thing that you need to understand is, how do you change things and where do you even go to do that? So over in the top right, this little 3 square with the plus icon that says edit dashboard. Once you click that, everything starts to move. You are able to drag and drop and customize the dashboard to your liking. There are certain things that maybe you are interested in. There are probably other modules that you do not care about. We built this platform to keep the modularity in mind. All traders are different. So when we are working with a platform like this, we want you to be able to customize it in a way that works for your trading. You don't need to have anything on here that you don't want. You can have multiples of things that you do want. It is fully customizable to your trading style. So that is probably one of the best things that we've had. A lot of these platforms that currently exist, they are forcing you, oh, this is just a page for unusual options. Oh, this is just a page to look at the exposures. We wanted to set up a platform that could be your be all end all, a one-stop shop. So you have access to everything that you want in one place. After you click on the 3 box with the plus sign, it then changes and you are able to edit the dashboard components. So in this screen, you are able to remove everything that you do not want to see and save. And then you are only left with the things that you do want to see. And the same way, if you want to add stuff in, easy peasy, move it. All the modules are resizable and scalable. So if you wanted to have something a little bit larger or something smaller, it's totally possible to do that. As we go forward, I know that there is a limitation on how small you can make things. So right now we are set up in a 3-column system for regular desktop. Obviously, if you're on mobile, this is going to scale down to just a single column. But the flexibility for everything is there. And then after you are done moving stuff around, so you don't accidentally move anything more, you just click the lock dashboard icon, and you can see you are no longer able to move things or accidentally put them somewhere else and resize them. So that is really how simple it is to set this up. Now, it gets a lot more complicated when you're trying to think about how to analyze the data or what you are looking at. So for today, we're going to break this down into 2 parts. Sheen and Geo are going to briefly cover some of the exposures, and then Hassan and myself are going to go over some of the more familiar concepts that we have with the tape, the options, and the top 10 dark pool and market orders. So Sheen, I believe you can take it away from here and start covering that.
All right, I'm going to share my screen.
Okay.
Can you allow me to?
You should be able to.
Share screen. There we go. All right. So, hello everyone. Thank you for joining us today. My name is Jonathan, or otherwise known as Sheen Trades for those who do know me. And this is the intro to exposures using the Apex dashboard by Traderlink. With that being said, today's presentation is just an intro into 3 of the most relative options exposures. There are actually 11 more within the platform that are far deeper than these actually. However, these 3 are the most commonly used on a day trading perspective. So going over the outline and lesson plan for today, we have the 3, which is gamma exposure, Vanna exposure, charm exposure, and specifically the things we'll be going over are what are they and why are they important. So I'll be going over gamma exposure, Geo will be going over Vanna and charm. So starting off, gamma exposure or GEX essentially tells us how options delta, and the delta is the sensitivity to price changes in the underlying asset. So, and what this essentially does is it's going to tell us the change as the price of the underlying asset moves around. So if it increases in price, if it decreases in price, you'll be able to calculate essentially what the value per the delta is on your option contract. So the best way to think about this is think of it as a risk assessment tool. The higher your gamma exposure, the more your options position may actually change as the asset's price fluctuates. So the question is that a lot of people ask, why do we care about GEX or why do we care about gamma exposure? Because the important portion is if you're in an options trade, you want to know how the option actually changes with the price of the underlying asset you're dealing with. For example, if you have large positive gamma, a rise in the underlying asset's price could significantly increase said delta, making your position more sensitive to subsequent price changes, meaning you could exponentially increase your profits instead of just, most people end up buying an option or a call and it goes up, but selecting the right option in certain situations may help. So going into another screen share over here or another page, this is what the chart looks like, obviously, and we're going to be talking about what we look for first, right? From a very basic standpoint and a very basic concept. So starting off, we usually take a look at whether or not gamma exposure is positive or negative, and you can see that with this amount right here. The total is 4.47 billion per 1% move. So in this case, it is positive. So positive GEX actually indicates that the market has higher liquidity and is actually more balanced. This is because market makers are actually more likely to be delta neutral, and delta neutral just means the overall position of a market maker has a delta of 0. You may be wondering how they make money. And the simple and short explanation is either selling contracts to gain credit or making money in between the spread in large amounts, right? They're not dealing with small retail money, right? They're trading in the millions. So they make money in between the spread. And when they are delta neutral, it means that they are less likely to be forced to buy or sell large amounts of stock in order to hedge their position. So vice versa for the opposite. So if we see a negative GEX, on the other hand, it indicates that the market has lower liquidity and is actually going to be more unbalanced. For those who don't know what unbalanced and balanced means, The simple explanation of it is a balanced day means it's going to be relatively slow movement. And unbalanced days, you're going to have a really big move to the upside or a bigger move to the downside. It just depends on the situation at hand, right? So negative GEX, as I said, is lower liquidity and more unbalanced. And this is because market makers are more likely to be delta positive when GEX is negative, which means that they are more likely to be short stock in order to hedge their positions. So typically when using gamma exposure, we like to look for the strike that has the biggest bar and which is known as the highest exposure. We actually call this point the AOI, or area of interest. And this is just one simple way to use that is utilizing it as a level. So going into Van exposure, I'm going to hand it over to Gio to talk about this.
Hey guys, so getting into Vana exposure and charm exposure, it's a bit similar to gamma exposure, but typically Vana exposure measures how much the delta of an option is going to change with respect to changes in the market's volatility. So in simpler terms, it helps us understand how changes in the market volatility will impact the option's sensitivity to price changes in the underlying asset. The importance of Vana exposure is basically in its ability to provide insight into how the option position is going to be affected in the shifts in volatility. For instance, if your Vana exposure is positive, and increase in volatility will increase your options delta, making your position more sensitive to price changes in the underlying asset, which in turn may cause a market dealer to hedge based on the risk concerns causing a large move. And that's typically how we trade, me and Sheen, using delta hedging requirements and overexposed positions in order to catch a large upside downside move based on these adjustments. So in the next slide on this graph here, it's just a simple illustration on how to read basically Vana exposure high sensitivity areas. So on Traderlink's site, we have, typical graph bar, just like the gamma exposure one, where there's larger bars with higher Vana sensitivity, right? Which would in turn mean lower market volatility. And for the lowest bars on the Vana exposure chart would be higher volatility areas. And you can cross-reference this image. We'll link the PowerPoint in our Discord to so you guys can cross-reference this with the Traderlink bar graphs themselves. And getting into charm exposure, it's also known as delta decay. So charm measures how the delta of an option changes with respect to time. In essence, it tells us how quickly our option sensitivity to price changes in the underlying asset and how it's going to decay as we get closer to that option's expiration date. It essentially is a measure of the rate of decay of the delta of an option. So if you don't know this, delta is kind of what gives options their value, and how much that decays over time. So why should you care about charm? Well, if you hold an option knowing its charm, it can give you an idea of how its value is going to decrease over time. For example, if you have a high negative charm, your delta is going to decrease rapidly as you approach the option's expiration date, reducing the sensitivity of your position to price changes. Now, if we go over to the charm exposure chart, again, it's similar to Vana in terms of how it moves. Gamma is the one that's a bit different in terms of how the distribution of it changes. So some things that you might be aware of are charm rallies. So basically what a charm rally is, it's a short-term price increase in an asset that is caused by dealer hedging positions. This happens when dealers buy options to offset their short positions in an underlying asset. The buying of the options causes the price of the asset to rise, which can lead to a self-reinforcing rally. Charm rallies really only occur in two types of cases: when the underlying asset is close to expiration, and when there's a large change in implied volatility. This is because market dealers are more likely to hedge their positions when the risk of losing money is high. Their overall goal is to maintain a delta neutral position, meaning they make no money whether the stock goes up or down, and they make money based off of that spread, as Sheen had mentioned before. So when the risk of losing money is high and they're a little bit overexposed on their position, they tend to rehedge their deltas, either buying back or selling off stock. And these are the types of moves we typically try to catch. But overall, we typically hear a lot about the effects of gamma, but Vana and Charm and its effects can be similar, and they're also nothing to, brush off. So as a reiteration, right, Vana is a measure of per change in implied volatility, and Charm is a measure of per change in time of the amount of delta exposure. So those two effects are much less convex, but they're just as important as gamma insights and lead us to things as never short a dull market, if you've heard that phrase before. So how they affect the underlying is when there's skew in the equity downside. There's a higher implied volatility as the implied vol is higher than the upside, and generally market dealers are short put and long calls, as well as hedged with short stock. This means that they're required to buy back that stock as time passes by and as implied volatility comes down, causing a steady buyback as the time of expiry starts getting closer. And that's typically how Charm moves. Again, there's a lot more complicated methods to get a little bit more of an accurate assumption that we'll go into eventually as more modules come out, more videos for those modules come out. But other than that, it's pretty much it for the basics of Charm and Vana exposure.
So when we're looking at all of this, everybody just be aware that just like when you get into options trading at the very beginning, there is a little bit of a learning curve to understand this information. Coming off and explaining the real foundational elements of what we're looking at, it is complicated, right? After you get a couple of weeks of actually utilizing this, it becomes a lot easier. A lot of this, are we up, down? Is this a buy condition? Is this a sell condition? You'll be able to see with those graphs at more of a glance. Like, it's not going to require as much time investment on your end to be able to identify this. But what we are trying to do is we are trying to get a better grasp of what the market conditions are. If we can understand where the people with all the money are hedging, or what levels we need to look at that are of interest, we can then make better assumptions ourselves as traders, especially trading on the short term, being like, oh, well, if they lose a ton of money if we go under this level, then odds are that they're going to want to keep it over that level. It becomes as simple as that, but it does take a little bit of time to understand this. So please, if you do not grasp this through this chart, the sine curve is very, very confusing just at first glance, but it does become easier to understand over time. And we will be going in depth into at least what, five or six of the exposures, I believe, are the main ones that we want to look at. So we will be rolling out more modules over time so that you can actually get a grasp. Like, I wouldn't anticipate anybody totally understands this concept right now. Please just be aware this is just the overview of what you're going to be learning. So that is the basics of those three. And then Hassan, do you want to cover the time and sales? I can share my screen again. This is your bread and butter.
Beautiful. What's up, everybody? Hope you guys are having a wonderful day. My name is Hassan. Most of you guys know me as Rippy God. Today, I kind of want to discuss to you guys about the time and sales portion that we have here on Traderlink. And the goal here of the time and sales portion is to find the imbalance. So as we pretty much taught traders how to read the tape, the main concern most traders had was how to read the imbalance on the time and sales. So as you can see, we kind of changed the entire way you could view the tape from what you're seeing right here in front of you. Personally, I don't know about you, but any other brokers that I tend to kind of use when reading the time and sales, it does get a bit hard to understand where the imbalance is heading based on the trend of the market. So we kind of consolidated here I believe in an easier way to kind of read the tape. So as you can see, we have the time right here. We have the bid and ask where it is being filled. You have the size of the order. And then at the same time, on the right-hand side, we have the value of the order. Now you can kind of look at the time and sales to determine imbalances by looking at the values of the option of the shares that are getting filled, as opposed to sitting there and trying to calculate how many shares did so and so buy. So as you can see here, when we see the orders come in green, these orders are being filled at the ask. When we see them kind of fill in red, these orders are being filled at the bid. And based on what we see in front of you, this is a live real-time overview. Today is a bit of a choppier day, but we can kind of determine where price action is more imbalanced to, whether it's imbalanced more to the buyer side or to the seller side. Today is a bit of a choppier day to kind of show you this, but as you can see, this is how we have it pretty much set up. And on the left-hand side, right here on the right-hand side here, Mitchell, if you can kind of toggle between the 100 plus and yes. So you can kind of filter it based on what you want to see. If you want to see only orders that are executed 500 shares or above, you can kind of toggle it. You want to see larger orders that are toggled at 1,000 shares plus or 2,000 shares plus, you can also toggle it. Sometimes when you're reading the time and sales, you will see a large blue order that comes in. Those large blue orders are mainly orders coming in above the ask, or they could be dark pool orders as well. If you can also add the top 10 market orders, as you can see right here, the imbalance at the second is flipping to the sell side, just based on the market premium right here. Right here, imbalance to the sell side, and you can see it in real time. It's much more easier, much more cleaner to look at something to kind of distinguish the trend. I mean, I don't even need to look at a chart, and I can tell you that we're falling down right now in real time. Yes, we are falling pretty bad, but as you can see, it's very much easier to look at the imbalance when we're trading on a trend basis. We also added the top 10 market orders. As you can see here, Mitchell is just setting it up. These are the top 10 market orders that are coming in real time. Usually when we are looking at the time and sales, these are orders that we tend to kind of miss unless we have it filtered in multiple montages and models. But in this case, we're just in this case right here, as you can see, we are pretty much have them separated, so it'd be easier for our eyes to kind of watch these orders, because if you look at them, some of these orders are valued at $450 million. So we want to be able to understand when these orders do come in real time, we can catch them. Again, you see the timestamp, the price at which it gets filled, the size of the order, and then the sentiment, if it's filled above the ask, at the bid, under the bid, and then the value of the order. And then again, on the right-hand side, we have the top 10 dark pool orders. With dark pool orders, these are orders that are routed through a different server. These orders come in 24 hours after they're placed. So as you can see here in the timestamp, you have an order at 11:24 a.m. Filled at 452.298. The size is about 883,000 shares with a value of 400 million. And as you can see today, we never even traded at 452.298. This order was made on Friday, early morning on Friday, and we get to see it today. Based on the sentiment, you can see that it's under the bid, and we distinguish that based on the current price action that we see in front of you, that this was a buy order. Now, how would I use this as a trader from a day-to-day perspective? I would look at this as an intraday pivot level. So when price action comes to 452.298, I'd pretty much look at the time and sales to determine where the imbalance is headed. And based on that, I would make a trade to the upside or to the downside based on where the imbalance is headed from this pivot level that you see right in front of you. As you can see, the time and sales is rolling with imbalances to the downside. As you can see, it's very much easier to look at the time and sales to determine that, and in other ways, when you're really looking at the time and sales, it's much harder to trade the normal way. Like, I'll be honest with you, I've taught hundreds of thousands. Actually, we've probably hit the thousands range, thousands of traders how to read.
Yeah, for sure.
And you know, reading it from this way, it's so much more relaxed. Like, I'm reading this and I'm telling you, yes, the market's coming down because the imbalances is towards the sell side. And you know, by looking at the time and sales, you can see that. The orders that are coming in white, what are these orders? These are orders filled between the spread. Oh my God, the market dropped 10 points.
Yeah, it's crashing right now. What a good time to watch the tape.
Yes, but I mean, it's the perfect time to do this because you know, when we're looking at the tape, the main goal is to find where the imbalance is. And you know, I mean, the dashboard is doing all the work for me for this particular presentation, because it's showing you where the imbalance is kind of headed based on the sentiment of the market. And that there, folks, is my point. But I'll have here Mitchell kind of wrap us up, and we'll go from there.
Yeah, so I mean, when you look to see all the information that we have access to just currently, and as time goes on, we'll continue to add to this and improve. There's a lot of information. There's no way that we're possibly going to be able to describe everything in detail in just one session. So like I had mentioned before, over the next few weeks, we will be diving into specific lessons for each, or at least a large portion of the modules that we have, so that you can understand how to better utilize them in your day-to-day trading. For me, the main things that I'm looking at for everybody that's in the RG server on a day-to-day basis, almost all of my levels that I'm utilizing for either entries or exits are based off of the dark pool orders in the top 10 market orders. So just as a quick example of how I'm doing this, it saves me so much work, right? So at the beginning, we're all looking at the chart. We're all trying to, you know, draw our lines, trying to determine the trend, trying to do all of that. And one way that I streamlined my trading was I just looked at where all the money is, right? Where are these people putting hundreds of millions of dollars? And I'm just using those levels now, right? So that saved me a ton of time just in my day-to-day trading. And things like that just make us better. It makes us more streamlined. It optimizes our trading routine. And you are able to do that with every single module that we have access here to. So over the next couple of weeks, we'll be rolling out a schedule, breaking down some of these in a bit more detail so that you can understand how to better utilize them in your trading. For everybody that is currently registered on the site, as you go through and you start to see this, you start to utilize some things. If you find any issues, any bugs, you think of anything that you would like to change, please drop your information in that feedback form. So on the main page, the feedback form is just right here. Just a jot form, very basic. We don't really need any of your personal information. We just want to know what you would like to see, what you feel like needs improvement. And if you find something that you really enjoy, please let us know that too. It makes us feel good about ourselves. Yeah, I think that's it. So getting it together is easy, right? Customizing your dashboard, super simple. Everything is relatively straightforward. As time goes on, we will start to dive into exactly how to use each of these modules and how they will improve your trading.
Let me just say something real quick before you wrap up.
Yeah.
If you're interested in also the beta feedback giveaway that we're doing at the end of the beta launch, you know, you'll get an email with a feedback form, and then, you know, from there, that's where I'll pick the winners based on the best feedback. Jane Adams asks, is the beta still open? Yes, it is, Jane.
Yeah, you can access the site. You don't need to go through the form to pre-register anymore. You can just go to traderlink.io, right? So this is our homepage. And then once you're there, you just need to go to register for beta. You'll get all the information, you sign up, and you will be able to access that. So if anybody in here is not currently registered, it's that easy. We don't even need your credit card, don't need any of your info for that. Register, and this will be running until the 6th of August. Yeah, it's exciting. I mean, this is something that I've been using, and I know Sheen and Gio, actually everybody's been using this on a day-to-day basis, right? This is what we're using to help us decide how to trade, what to trade, and when to trade. I think that's it. That's it for now. So we'll dive into some more detail as the week goes on. And if anybody has any questions, you can either drop it in, I drop it in the Discord, I wouldn't drop it in the Zoom, and we will get back to you right away.
Also,
Sheen,
before
Gio, do you guys have anything else to add?
No, just thank you guys for joining. Always happy to be here.
Yeah, thanks everyone.
Yes, thank you guys for joining, but also at the same time, thank you for helping us with the beta test, because you know, this is again a tool made by traders for traders, but we need your help, you know, to help us, you know, build a better tool. You know, we want to make this as interactive as possible, because in the end of the day, you know, what you like and what you don't like can help determine how we can make this the best platform on the market. So thank you guys for joining in today, and thank you for taking time out of your busy day to check out what we have to offer. And we're excited to have you on this journey with us.
Awesome. So we'll post the links in the Discord for the upcoming education. So everybody have a great rest of your day. Enjoy watching the market, do whatever it decides to do here.